Bismillahirrahmanirrahim. In the previous lecture, we discussed the direct financing and indirect financing. We also discussed the financial markets and institutions. So the transferring of the funds, how the transfer of the funds took place from the lender to borrower. So here this table shows that this is lender, these are the financial intermediary. Financial intermediary are financial institutions, and these are the borrowers. Now lender may be individuals or some businesses or companies. Individual, just like me and you people, when we save the money or we have some saving, so we are called individuals. Companies, different companies or businesses, they also have their saving, so they also invest that money. Where they are investing? So here in financial intermediary just like bank, insurance companies, pension funds organization, mutual funds organization, and so on. So these lender give that money here, and from here borrower borrow that money. Borrower may be individuals, companies, central government, municipalities, or corporations. The transferring or channelizing the funds, that is shown in this here. Look at, these are financial intermediary. Here investors. These investors are what they are doing. These investors, what they are doing, they take some, just a minute, these investors here lend the money. In this, first I will explain the direct investment here. So look at, this is the investor, this person here, this one. They lends money where? To this borrower. And they are purchasing the security, and these personals or businesses, they are issuing their security. So from here fund is channelized from this person to this person. And when fund is channelized, so what happened? This is called direct investment. Funds that channelize from here to here. But in indirect financing, the funds, that is what generated through by how? The investor may be householder, just like me and you people, are business firms, companies. Sometimes government is also lending money. They make investment in different sectors, and similarly foreigners. So what they do, they purchase the shares or the security from the financial intermediary, and these financial intermediary further channelize their funds to household in shape of loan, business firms, governments, and to firms. So their fund is channelized through proper channel here, from investor to financial intermediary, just like bank and other company, insurance company. Just from here fund is channelized here to the borrower. So in this way, funds are money transfer from lender to borrowers with the help of the financial intermediary. So this type of the channelizing of the funds, that is called what? That is called indirect financing, and we can say that is more less costly and less risky. So this was the scenario about the direct and indirect financing. Functions of financial markets. So the financial markets, they serve the following basic functions. One by one we are going to discuss these functions. So as shown in the above figure, the funds can move from lender to borrowers by a second route, and that is called indirect finance. I'm talking about this one, this route, this from here to here. This is indirect financing, and this is the first one route. This is direct financing. So we will mostly discuss indirect financing. So this route, which involves the transferring of the funds from lender to borrowers, because this involves the financial intermediary, they stand between the two parties, lender and borrower. This is financial intermediary here, that is lie between these two personals. These are the lenders and these are the borrower. So this financial intermediary here, the banks or other insurance companies, etc. So they are stand between these two, and they helps to the transferring of the funds. So that's why the main functions of the financial institution is what? That is lending of borrowing and lending of fund. Borrowing and lending of funds, that is the important functions of the financial market. So a financial intermediary, they do to borrow the fund from the lender or savers, and then using these funds to make loans to the borrowers, which they spend. Dear students, I will explain this with a common example. Common example is like a bank might acquire funds. They take funds, collect the funds by issuing a liability in the shape of current account or saving deposits or fixed deposits, as you discussed in the previous semester in money banking. So then it might use those funds. They not keep that money with themselves. So they use that funds to acquire an assets by making a loan. Just like they are making loan to persons or any kind of business. I will take an example of Alcozy company.
So bank collect the deposits from us and further they channelize to, let's suppose, to Alcoa company in the financial markets. So the ultimate result in that funds have been transferred from public to business with the help of financial intermediary bank. So borrowing and lending taken place. The process of indirect financing using financial intermediary just like a bank, that is called financial intermediations. So financial intermediation is what? That is the primary route. Yeah, we can say that this is the primary way for moving the funds from lender to borrower. Although most of the pupils, dear students, they focus much of their attentions on security markets source. So particularly in the stock market, financial intermediary on another hand are far more important source of financing for corporations than security markets. So borrowing and lending, that is the main functions of the financial market for the channelizing funds. Second one function, that is price determination. So dear students, price determinations financial markets provides a vehicles by which prices are set both for the newly issued financial assets and for the existing stock of the financial assets. Here two things are discussed in this price determination. First one is what? That is financial assets price, newly issued financial assets. So newly issued financial assets, like new for the first time, when any corporations, they are issuing the bonds, the shares, the certificates, so certificates of deposits, so on. So this is the financial market that they provide the platforms that over there the prices of that are fixing through by investment banks. Investment banks, by name that are banks, but by functionally wise they are not bank. They when any corporation, they are issuing their shares, so through with the help of the investment bank they can issue their share for the first time. So the prices that are given are fixing in the financial markets. Similarly, the existing stock, so the existing, when already in a secondary, in the secondary market, when these securities are already issued, so the buying and selling took place. So this is the financial markets where the prices of both the newly issued financial assets and already issued financial assets are fixings. Another functions of the financial market is risk sharing. Financial markets, dear students, they helps to reduce the exposures of investors to risk. That is uncertainty about the returns investors will earn on assets. When investors make investment, So automatically they will think about the returns in shape of interest. So financial intermediary do this to reduce their risk, to return those, to minimize the risk of those returns through by the process, and that process is known as risk sharing process. The investor creates and sells assets with the risk, because risk should be involved. Any kind of business or any kind of investment, risk is involved here, so that the pupils are compatible with that risk. So with the intermediary, then the risk characteristic that people are comfortable with, and all those intermediary then use the funds they acquire by selling these assets to purchase other assets that may have far more risk. So here, dear students, low transaction cost for the financial intermediary or financial institutions, they allow them to do the risk sharing at a low cost, enabling the investors to earn the profit on the spread between the returns they earn and the risky assets and the payments they make on the assets they have sold. So this process of risk sharing is also sometimes called asset transformations, because in the sense risky assets are turned into safe assets for the investors. Another one, chance that are provided by the financial market for the risk sharing is that the financial intermediary, they also share the risk through by what? Through by portfolio or diversification function of the market. Portfolio or diversification, this is another one activity that should provide by the financial market, that in the different kinds of the financial instrument or financial assets, if the investor make investment, so in this way their risk will be minimized. Like if I have $1 million, so if I invest in one type of security, so that is a risky. Yes, return will also be high, but that is a risky. So if some portion of this investment, if I make invest in bonds market, if I invest in the equity market, if I invest in the banks, in the insurance company, so in this way my risk, I diversified my investment, so my risk will be minimized. Next one function is liquidity function. Liquidity is also the most important functions of the financial markets. The financial markets, they provide the holder of financial assets with the chances of resales or liquidate these assets. Look at, when investors make investments, so they receiving some securities or financial assets, just like bonds, common shares, preferred shares, certificates of deposits. So all these security, it doesn't mean that, let's suppose if the maturity time is 5 years, 10 years, 3 years, 2 years, an investor will keep it for till the maturity. This is the financial market which provides these opportunities to the investor, that if any time the investor wants to sell their security, so they can sold out those security. Similarly, if any time the investor wants to buy more security, so they can buy more security. This is called the liquidity functions. Liquidity means conversion of assets, any kind of assets, financial assets, to cash or cash equivalent form. So when all these financial assets are trading in the financial markets, so this is the financial market which provides these facility to all investors to make that any time they want to sell or to buy the security, so they can sell, resell, they can buy the security at any time. The next one, functions of the financial market, is efficiency. So financial markets reduce transactions and information cost. This is the main functions of the financial market. The time and money spent in carrying out in the financial transactions, that is a major problem for the pupils who have excess of funds to lend. It means that for the savers. So the financial market, in financial market, the financial intermediary can reduce the transaction cost because they have developed experts in lowering them, and because their large size allows them to take advantage of the economies of scales. The reductions in transaction cost per dollar of the transactions, or in Afghanis, let's suppose per, so that is the size of the transactions increase. For example, a bank knows how to find a good liar to produce an loan contract, and that contracts can be used over and over again in its loan transactions. So thus they are lowering the legal cost per transactions. That is the efficiencies. Similarly, I will explain it with another examples, just like when we are taking any kind of the transactions, we deposit money. So with the deposit slip, we can deposit our money. Similarly, if we have take some loan, so with low cost, low information cost, we can take the loan from the bank. So these was the main functions of the financial markets. Inshallah, in the upcoming lecture, we will explain or studies the types of the financial markets, just like money market versus capital market, primary market versus secondary market, organized market versus OTC markets, equity market versus debts markets, derivative markets and foreign exchange market. And then we will study why to study the financial market, why we are studying the financial market. So for now I will leave this session, and inshallah will appear in the next session as soon. So for now, take care of yourself. Khuda Hafiz.